lows. If we're starting to even uptick from 3 to 4%, how does the Fed start to cut rates aggressively at that point, knowing the repercussions of cutting rates is to stimulate inflation again? And so I think that the more important thing here is just if you can't get the inflation rate in this period below 3%, and we start seeing an economy that's weakening, and by the way, Cisco laying off 4,000 people. I mean, we've seen layoffs starting to compound. We've seen the retail sales just came out a couple days ago, and those are starting to get weak. And one other chart I'd love to show you guys is the U6, right? And this is something I follow as a leading indicator. And if you take a look going back to the 2000 dot-com bubble, before the recession hit, U6, which again, for those of you that don't know out there, U6 is underemployed, right? So it's people that want full-time work, but they might only be able to find a part-time job or two part-time jobs. But if we look at this, prior to recessions, there's about a 12-month period where U6 begins to uptick even before the unemployment rate actually upticks. And you can see it right here in 2001 to 2002 before that recession. And you can also see it here in the 2006 to 2007 period before 2008. Now, COVID, it didn't really happen because obviously that was more of a black swan. But we are seeing, if we go right here, you can see an uptick in the atmosphere in the market is the same as when I called the top in Bitcoin at 69,000 in 2021. It is exactly the same psychological sentiment out there.
This is just for this one particular stock or all semiconductors?
No, it's generally most semis. I mean, obviously the leaders are you have Nvidia, which is one of those, and then you have other ones like SMCI and a few others. ARM is a big one as well. But we're also seeing this in other things as well. I mean, if you look at a Microsoft, I mean, Microsoft has gotten way out of control. I can bring up that chart. We can see in exactly what's going on there. But these type of moves that have just created these behemoths, well over $3 trillion valuations, they're getting extended because the money flow is focusing in on just this group. And I think it's important to remember that if you look at which sectors, there's 11 sectors in the S&P, right? There's only one sector that has been hitting new all-time highs, and that's technology. Everything else has been left by the wayside. In fact, I believe I just read earlier this week, 39% of the S&P is still below its 50 moving average, which is astounding for a market that is hitting new all-time high.
Right.
Issues down the line. So I am confident that we will see a recession. The question is it second half of this year or is it before then? But I do think by the end of this year, we will see that recession. On the S&P 500, again, to see these type of runs, very, very unusual to see a run this vertical on the S&P 500. Again, if you look at the stocks in the NASDAQ, what's been leading? There's been a few stocks that have been carrying this market higher. Everything else is struggling, and that is also a concern. So again, then you look at China, you look at what their economy is doing, and obviously they're stimulating, but what are they going to export in terms of a slowdown to us? Because it is global. We are in a global environment at this point.
I just want to push back on the recession call. I saw
Sure.
somebody tweet this. I can't remember who. I can't find the tweet, but I remember seeing this and I thought, okay, this is an interesting argument. He said, all you have to do is go outside. I mean, go to a Taylor Swift concert or go to a restaurant. There's no recession, right?
Right.
How do you
Well,
respond to that?
as long as, yes, and that's fair. As long as you have people that have credit cards, you're right. But look at the savings rate. The savings rate was sky high during COVID. It has gone negative. Anecdotal story here is that
Sure.
I bought, stupid me, thinking I'm a genius investor outside of the stock market and crypto. I went and I bought a couple horses, right? These show horses. Well, guess what? The sale market for these things literally dried up as soon as interest rates started to pop and stuff, and I haven't been able to unload them. And the goal was to actually flip them. And now the
Oh,
rich are like staying away from buying horses, believe it or not, which is crazy. But to me, that's another signal. So again,
mm.
in real world situations, that's one good example that even the rich are starting to pull back. I don't know if it's political because they're worried about the coming election. Is it because of the economy? Is it because of other things? But there is a pullback in the rich spending as well.
Interesting. All right. Well, let's talk about the stock markets. If you pull back, if you put back the S&P 500 chart, Gareth, where you got the wedge pattern here. Um, look, I think the
Nice
first
job on
question.
nailing that term, by the way.
I've talked to you for years, Gareth. I've been learning a few things from you. I picked up a few terminologies here and there after a couple of years working with you, Gareth. But yes, this wedge pattern. Look, the first thing that people would ask you looking at this chart is how can you still be bearish looking at this chart, right? I'll just leave you to respond to that.
Yeah, so to show you guys, but in reality, if you look at history, that's when the market actually declines. And the reason, this is great education, the reason why the market declines when the Fed starts cutting rates is the Fed is cutting rates because things have gotten very, very bad to the point that they have to cut rates. And the market gets fretful, meaning they start to worry that the Fed is behind the curve, that they tightened too much and they didn't start cutting early enough. So
Yeah.
what they do is when the Fed says, "Oh, let's cut 25 basis points," the market says, "Oh my God, this is horrible. We're going to go into a crazy recession. They should have cut 50 or 75 basis points," and we actually roll over. And by the way, same thing for the yield curve inversion. We are still inverted on the yield curve, and technically we look at history and it shows us that when that yield curve uninverts, that's when the recession tends to hit.
Can we look at Nvidia for a minute? I think this is a good master class where case study
Hmm.
in technical analysis with fundamental analysis. So,
Yep.
just from a pure technical standpoint, I think look, it's gone up in a vertical line in the
Yeah.
last 6 weeks. I think I know what you're going to say, but before I let you say what you're going to say,
Just to show us this, right? Let's go to Tesla. Let's go to Tesla during 2021 here and take a look. So we all remember this run. I mean, this is one of the most incredible runs because the EVs, the cars that Tesla were producing, they were the best in the business. They were the only ones that really people wanted. Yeah, you could get an EV from somewhere else, but it got like 50 miles to the charge. It was crappy, but Tesla was the best. What's happened? Every other car company out there is now coming out with fantastic miles that you can get per charge, great cars, and Tesla's cut prices over and over again, and their
yeah,
margins have collapsed. And here we see Tesla now. I mean, and you just look at the collapse that we saw here, right? If we take the high of 2021 to the low, it dropped 75% before getting this recent bounce. And again, markets, by the way, all-time highs. Tesla shouldn't even be in the Magnificent Seven anymore based on its performance, frankly.
yeah. I was going to ask about Tesla. Why it's been a laggard now on a technical basis. If you were to, this is one. Here, I'm going to throw out a counter argument. Tell me if it
Mhm.
makes sense or not. So, if you group Tesla in the Magnificent Seven stocks, and you
On my call, what I said was gonna happen on the ETF launch, I said it would pull back and correct?
Yeah, you were right there. Yeah, it
Yeah,
did. But okay, so that's exactly what happened. But then something else happened in the last couple of days. So
right.
what? It's now squarely above $50,000 a coin. A huge move. First of all, let's recap what happened, and then we'll give your outlook.
Sure. So we had the ETF launch and that hype, again, hype is hype, whether it's in Bitcoin, whether it's in Nvidia, whether it's in any of these things, it drives it to these crazy levels, overbought, and then you get kind of the sell the news event. And that's exactly what we saw in that. I happened to be short at that time. We got out just around this, just below 39,000 down here. And the beautiful thing about this is it created this, look at this channel. You have the highs here connected to these highs and this low connected to these lows, and look at what we just hit on Bitcoin. So believe it or not, I initiated a new short just up here, very small position, just to kind of a dipping the toe in the water type thing. But again, the idea being is we'll see a pullback off of this. And now the recent run in Bitcoin, to me, it's not so much about